Hey everyone, it's Ryan here. Have you ever wanted to start investing but felt stuck not knowing where to begin? Your friends are talking about all kinds of investment products, and you're left wondering, which one's right for me? Today I'm going to run through 8 beginner-friendly investment ideas you might want to consider. I'm based in Australia, so I'll focus on Aussie products, but wherever you are, I hope this gives you some clarity and inspiration. All right, let's keep it snappy. Take a quick peek at my disclaimer, then let's jump in. The first one. Pay off your high-interest debt. Paying off debt might be the only thing where risk and return aren't proportional because it has no risk but delivers very high returns. If you got a personal loan or credit card debt over about 10% interest rate, clear that off before you invest anything else. Credit card rates can be north of 20%, so every dollar you pay down is like instantly earning 20% back. For lower interest debt, such as home loan at 5 to 6% or a low interest rate car loan, you might choose to invest instead if you can reasonably expect higher returns elsewhere. For example, if you can earn an 8% annual return by investing $10,000, then of course it makes more sense to invest rather than use it to pay off a 6% home loan. But high interest debt? Knock it out first. The second, build an emergency fund. An emergency fund is cash you can withdraw at any time to cover unexpected expenses. So, how much do you need to prepare? Aim for 3 to 6 months worth of your basic living expenses. If you're still not sure what your monthly expenses look like, check out that video I did on tracking your spending. And start getting into the habit of keeping a budget so you really know where your money's going. Now, where should you keep your emergency fund? Ideally, in a super safe, highly liquid account that still pays decent interest, like a high-yield savings account or your mortgage's offset account. Only once you've set that cash aside should you look at investing the rest. The third is top up your super via salary sacrifice. Salary sacrifice into your superannuation can be a smart tax move. This is because contributions are taxed at 15%, which beats most people's marginal tax rate, often around 30%. Roughly speaking, every $10,000 you salary sacrifice could save you about $1,500 in tax. The only problem is you usually can't touch that money until retirement, so it's not ideal for someone who wants to FIRE. Since salary sacrifice involves pretty complex tax rules, it's a good idea to check the ATO website or talk to a professional accountant. The fourth, invest in bond ETF. For beginners looking for low-hassle, low-risk investing, buying government and corporate bonds via a bond fund is your best option. I listed the 2 largest bond ETFs in Australia here, ASX codes, IEF and VF. The perks of bond ETFs are super low risk. Each ETF holds hundreds of AAA/A-rated bonds, so your risk is spread out and kept to a minimum. Tiny fees. Management costs are just 0.15 to 0.20% per year. Steady returns. To date, they've averaged about 3% per annum. How do you buy them? It's easy. Just log into any Australian share trading platform and purchase them the same way you'd buy a stock. The fifth, invest real estate. You might think I'm joking. $10,000 probably won't even cover stamp duty. So how could you invest in real estate? Actually, you can invest in REITs, the real estate investment trusts. Australian REITs, like other funds, can be purchased on any stock trading platform, and there are plenty to choose from. Here's one example, BWP Trust. I'm sure everyone in Australia knows Bunnings. In fact, both BWP and Bunnings are part of Wesfarmers, one of Australia's corporate giants. BWP owns most of Bunnings' commercial properties and warehouses. Its ASX code is BWP, and it delivers an annual dividend yield of around 5.1%. Investing in BWP is like becoming a mini landlord for Bunnings. You get stable rental income and potential property appreciation. So if you're bullish on Bunnings' future, being their landlord could pay off. The sixth, invest in stock ETFs and micro-investment apps. The Australian ETF market has been growing rapidly, and the rise of micro-investment apps make you can start with small amounts. The major ETF providers include Vanguard, BlackRock, and BetaShares. Micro-investment apps like Spaceship and REITs let you invest your spare change or set up regular small contributions. If you're interested, check them out. Due to the limited space here, I won't go into detail. The seventh, trade individual stocks. If you're into market analysis and short to midterm trading, $10,000 is a decent starting pot. But compared with ETFs, trading individual stocks demands more expertise and carries higher risk. For new investors, unless you're confident in your trading skills and professional knowledge, it's better to stick with lower risk options. The eighth, peer-to-peer P2P lending. P2P lending platforms act as intermediaries, connecting borrowers who need funds with investors seeking returns. Investors provide the capital, borrowers repay principal and interest, and the platform handles credit assessments, contract management, and fund transfers. Compared with traditional banks, P2P lending is more streamlined and interest rates are more market-driven. Take Plenty as an example. It founded in 2014, ASX listed in 2020, and regulated by ASIC. It offers several investment products with different terms and returns rates, which allows investors to earn up to around 8% per year. To protect investors, Plenty charges borrowers a small fee that goes into a provision fund. If a loan defaults, that fund can cover the loss of principal and interest. Of course, higher returns come with higher risk. When choosing a P2P platform, opt for those with substantial scale, proper financial licenses, and ASIC regulation. And before you invest, read the risk disclosures carefully and manage your exposure. All right, that's all for today. Time's up. I'm not endorsing any of the investment methods we've covered, just sharing some ideas and directions. For those people who wants to invest but doesn't know where to begin, I hope this gives you a bit of inspiration. If you enjoyed the content, please subscribe, hit the like button, and share. Thanks for watching, and I'll see you in the next video.